Welcome, everyone. Thank you for joining our coffee break webinar this afternoon. I'm Kathy Gregg. I'm a Managing Director with Treasury Strategies, and I'm joined here in Chicago this afternoon by Tony Carfang, also a Managing Director at Treasury Strategies. And we're here today to talk with you for a few minutes about NDepth, your new bank fee management solution. This is a product that we've been developing at Treasury Strategies that is solving a problem that historically has defied an easy solution. There have been solutions available out there, but they haven't been easy, and in some cases they haven't been reasonably priced either. But NDepth changes all that. We're going to take you through the high points of NDepth this afternoon and offer you a very attractive proposition for getting to know NDepth and using it. But before we start, let's take just a minute to see what you all are doing as far as managing your account analyses. We have just one single poll question for you today. And what we'd like to ask is what you do now in account analysis review. Do you just eyeball them? Do you actually use spreadsheets or another tool on a regular basis? Do you review them periodically when you have the time? Or do you not review them at all? It's just a cost of doing business, or your balances are sufficient to cover services so you don't need to review in your mind. Answer those questions, and while you're answering, I've got a couple of other things to just tell you about NDepth. So NDepth, our account analysis management tool, is well along in its development. We're in the last stages of fine-tuning this version of the product, and after today's conversation, we're going to invite you to be part of the final stage of development. How are we doing on our survey? Do we have findings yet? I guess we have to wait a couple more seconds to see the findings. So what we're going to do here is take you through some of the sample reports on NDepth. We're going to talk about how simple it is to use every month, and we'll wrap up by talking about the banks that are currently included. Okay, so do we have our findings? Joe says we have our findings. Okay, so about 60% of you, wow, this is a pretty big number, bigger than I would have expected, say you use spreadsheets or other tools regularly. And about the same number review when you have time and eyeball them, and a few of you admit to the fact that you're not doing anything at all. Okay, so thanks for answering that question. Let's keep diving a little bit further into our in-depth solution. Tony, why don't you talk to us about how we've approached this?
Sure. Thanks, Kathy. In-depth lets you get a handle on those pesky account analyses. This is an age-old problem, and simply it's just so hard to read and interpret and manipulate the account analysis statements you get for your bank service charges. But with NDepth, you can easily translate your account analyses into understandable information. You can analyze your spend. You can uncover variances in either products or volumes or prices. You can benchmark the total price that you're paying for your services, and you can evaluate your balances and your earnings credit rate, which is extremely important because that's how you get a return on the deposits you keep with your bank. Now, Kathy will describe how easy it is with NDepth to actually do this.
Easy is the word. We have designed this to be really simple, and basically, there are two steps for you in the process. One is that you upload your statements, whether they're PDFs or EDIs. And two is that you download reports, current month reports, year-to-date reports. That's all there is to it. I want to underscore the fact that while most products require that you have an EDI, NDepth works very effectively with either an EDI or an electronic PDF. It has to be an electronic PDF. It can't be a virtual photocopy of a piece of paper kind of PDF. But as long as it's an electronic PDF, they work just fine. And in fact, that's most of the statements that we're processing currently is electronic PDFs. So you do those uploads, which takes you, I don't know, a matter of maybe a minute if you spend a lot of time doing it. Then you wait a couple of days, back onto the portal, and download reports that are ready for you to interpret, study, figure out what's going on with your banking structure. So you have, without breaking a sweat, without keying anything into a spreadsheet, much more efficient and cost-effective way of looking at your banking services, tracking that things are working properly, and managing your bank relationships for the most effective structure. Tony, people have been telling us all sorts of things about NDepth.
Right, and since March, when we introduced this as a beta to a small group of companies, we've grown to now over 60 companies who are using NDepth monthly to get a handle on those account analysis statements and better manage their service charges. And these 60 companies, Kathy, represent a variety of industries. They deal with a wide variety of banks, and we'll talk about the banks later, and they're companies that are both large and small. If we just look at a couple of things they're saying, on the bottom left, this Global Information Services company, their treasurer says that he struggled to interpret this data for over 30 years and has tried most of the other electronic solutions that are on the market and finds them either too labor-intensive or limited to just EDI statements and therefore not of a lot of use. Moving up clockwise, a treasurer of a global water technology provider, loves the summary reports, and in the case of this particular company, they have like 11 different subsidiaries, can't get a summary account analysis from their bank, and is using NDepth to do what their banks haven't been able to do in terms of reporting on the service charges. At the very top, we have a Fortune 500 packaging company that really likes the dashboards and the benchmarking. And, I'm going to turn it back to you, Kathy, to tell us about these dashboards, which, if you were to read other quotes, you can see that really captures people's attention.
Okay. So, yes, we will preview some of these reports. Now, this is sample data. This isn't live company data, but we've constructed it to be representative of what we're actually seeing. The first thing I want to say is our reports are driven by Tableau. Now, you may or may not be familiar with Tableau. Tableau is a data visibility software package. You do not have to own it or know how to use it to use NDepth, but Tableau is an incredibly effective tool that creates beautiful visuals and wonderful reports that you will be proud to show other people inside your company. The purpose of the dashboard section of the reports is to give you, first of all, a snapshot of all your relationships at one time, and secondly, to give you something to show either Treasury management people, senior management, or others in the business units of your company, something that you can very comfortably pass around. Now, if we go into a couple of the most important aspects of this dashboard, the things that I like to pay attention to, first of all, the balance and spend totals for the month. So this is the first place that you look at and say, is everything working the way I expected it to, and is there anything out of line? And when I look at this relationship profile report, one thing jumps out at me, and that is the fourth bank down on the list, Tri-Central. Their calculated ECR is a whopping 0.05%, whereas the rest of them all go from 0.3 to 0.6. So something is really, really small there. And yet I have a lot of balances there relative to my other banks. So, is that something that just happened? Is it something that I've seen in months past and I understand why it is? At any rate, this is a thing to look at. The second aspect of the dashboard that I love examining is the wallet share reports. Now, the wallet share F is not a new concept, but it is something that has never been this easy to get your hands around. It's always been fairly complex to pull together your wallet share numbers. And here, every single month, After that really strenuous 1 minute of uploading reports, you're going to get wallet share reports for all of your banks. And what is it that your banks are expecting from you? If they're credit banks, chances are pretty good that they expect a fair share of your operating business. And whatever that fair share is, they may not be able to measure or come close to, but this is what they're telling you that they want. I want a fair share. And you see from this wallet share example that we've got a little bit of unbalanced situation here. Mustang Bank and Tri-Central Bank are both a little out of whack. Mustang Bank, very little credit, 10% of the whole credit wallet, 40% of the services wallet, that orange bar. Tri-Central, right next to it, 40% of the credit wallet, less than 10% of the services. And Western First looks like it's well balanced. So as I'm looking at this, I'm saying, hey, we have something to level out over time if we want to keep our banks happy. Easy report, little work on your part to get there.
Now, another view of the data is the product view. And at Treasury Strategies, as you know, we consult the corporate treasuries on the structure of their treasury and banking and service environment. What we see here, from our practice, we've taken those couple thousand different codes that you might get on your account analyses and rolled them up into a series of easy-to-understand product families for you. You can see on the top circle, the total spend broken down by product family, but we make it very easy to get the big picture. So across the 5 banks, we can see in the middle here the 5 circle charts, and just by looking at the colors, you can see that 24/7 Bank and First Digital appear to be the 2 lockbox banks. Mustang Bank and Western First have the lion's share of the funds transfer business, and the electronics and ACH services seem to be Mustang and Tri-Central. In fact, if you look at this, you see Tri-Central has a little bit of everything here. The idea of these reports is to give you a quick visual image of how everything breaks out and how your services are allocated by bank. There may be opportunities as you look at these reports to consolidate some services at some banks or allocate them differently so that A, you might get better pricing, or B, you might get better servicing, or C, it might just be easier for your treasury team to manage if the services were allocated differently. Now, if you're a numbers person like me, as opposed to a visual person, those pie charts are nice, but the actual numbers are here in this particular table. So what we show you here is how you can go back and forth between the numbers and the pie charts. You can see the in-depth product families on the left-hand side and your total spend by bank in the table. This gives you a nice quick reference to see how your services are allocated, how your spend is allocated across your banks. Now, next up, we have a historical view.
Right. No set of account analysis is complete without the year-to-dates. So these are examples of this historical view. And it can't be easier to take a look at these and say, what the heck is going on? So you look at your service charges and you say, hey, at a couple of my banks, they're running pretty consistently, but at 2 more banks, they're bouncing all over the place. What is causing that? Is that something that I expected? Is it seasonal? Are there issues at those banks? Questions that are going to come to your mind when you look at these historical reports. Same thing with those balances. I'm not sure I'd show this balance report to my boss unless I knew the answer, because I'd be saying, oh my gosh, what's going on? Did somebody forget to do like the cash positioning for the last 6 months and we've just got random levels of balances here? Is our forecasting not working properly? What's causing these balances to fluctuate so much? And then, of course, you might see a report instead where all of these lines are relatively consistent and you just say, hey, everything's sailing smoothly, I can move on.
Getting back to a numbers chart, I love this balanced earnings credit rate report. This is the money chart. This shows you net what you're getting on the deposits that you keep at your bank. You're all familiar with earnings credit rates. We find that our clients are less familiar with the balance assessment fee, which is a charge for holding ledger balances. This table breaks it out and puts all of your banks on an apples-to-apples basis, so we can look toward the bottom of that chart, you can see the calculated ECR. As Kathy mentioned earlier, Tri-Central is at 5 basis points, but the whole group ranges from 5 to 60 basis points. Now, if you were an in-depth user and looking at our benchmark reports, you would have seen on our June report, in fact, that across the universe of our in-depth customers, the earnings credit rates in June actually range from 2 basis points on the low end up to 101 basis points on the high end. So this is an example of how our in-depth users could actually see where you stand. The calculated ECR is based on collected balances. That's pretty easy to understand. The balance assessment fee is based on ledger balances, and that's less easy to understand because that means you're paying the bank to hold your float as well as your balances. And while that's appropriate because the banks assess FDIC insurance and other regulatory capital based on ledger balances, it will impact different companies differently. In fact, if we look on here, what's nominally a 15 basis point balance assessment fee at First Digital Bank, based on ledger balances, when we remove the float and compute that on collected balances, it's 98 basis points, so that on a net effective basis, First Digital is earning minus 0.68 basis points on the balances. The company is keeping at First Digital, whereas if you look at the far right, our demo company is earning 43 basis points net at Western First. This is a whole new way to look at your balances.
We also have some variance analysis reports at the line item level. These are helpful if you observe your service fees moving from month to month, and you want to figure out what's driving those movements. Now, what will happen on this report in the far right column where it says total service variance is if you have big variance numbers, they will be highlighted. But for this sample company, for this sample analysis, there wasn't any variance big enough that it passed the highlighting threshold. So if you were looking at this, you'd say, once again, things look pretty good this month, nothing to explore here. But if you did see a big variance, it would start you asking questions. Was something going on unusual in the business unit this month that caused that big variance? Did something run amok in AR or AP that caused them to generate a lot of exception items, or is it expected seasonal variance in my volumes? At any rate, it drives you to the places where you want to be asking questions to make sure you understand what's going on in your banking system.
You know, Kathy, I sit back here and I listen and I look at these reports and just contrast this to staring at a 3-inch stack of, 8-point font account analyses staring at you every month, and just marveling that you can just move, drag and drop your PDFs onto in-depth and get these kind of reports. Really amazing. My favorite reports here are the benchmarks. And this really is where you get the insight into what's going on with your services, either based on the way you have them configured or how you have your volumes allocated across your banks, or what your pricing is. One of the interesting things that these show, you see the solid blue lines, and we actually call that sort of the cone of comfort or the zone of comfort. If your pricing falls, between those solid blue lines, chances are you're pretty well structured in your product family and your pricing is pretty reasonable. When you fall outside, that's a cause for concern, and there could be a number of reasons. It could be that you have insufficient volume to cover your fixed costs. It could be that the accounts aren't structured properly. It could be that some pricing is out of line, a number of things. What these charts show, interestingly, is that pricing is not a single point. So you can't look up in some table and say the price of lockbox should be X cents per item, because, in fact, you can see here it's absolutely a function of the volume and a function of how you have your product structured. It's a product, within a product family. It's the sum of both your fixed costs, your fixed services, your maintenance, your information, and your variable costs, your photocopies and items processed. If you look at this lockbox example, it's kind of interesting. The blue diamonds represent this actual company that has 3 lockboxes. And the leftmost blue diamond, all in, including maintenance charges and everything, this company is paying about $4 an item for that leftmost lockbox, with a volume of maybe 500 or 600 items a month. Now that is the highest price that this company is paying across all of its 3 lockbox banks, but relative to the market, this is actually the best bargain. It is less than the median cost of processing that volume. Whereas if you look at the far right, the all-in cost per lockbox is $3 an item in that case, but at 8,000 items, this customer is paying well above market. So using NDepth, the customer would know to examine the fixed cost of the lockbox, perhaps question some of the pricing, or alternatively, reallocate volumes. A number of things you can do based on this information. This stuff is really powerful.
Okay, so that concludes our very, very quick tour of some of the in-depth reports. Hope you enjoyed that. We'll be sending a PDF out of this presentation, and when we do, it will have this clickable link in it that is where you would sign up for in-depth. So what do you need to do if you're interested and intrigued? First of all, let me cut to the chase about the absolutely fabulous deal we're offering, and that is if you sign up for in-depth and upload account analyses both before November 30th, we will give you your first 1-year subscription at no charge. That's for up to 5 supported banks in the in-depth network. And what you would do to sign up is to go to this website, indepth.treasurystrategies.com. That takes you right onto our portal, our sign-up portal. Sign-up takes a couple of minutes, and then you're ready to upload your account analyses in our secure protocol. The banks on the leftmost column that says current are currently supported in-depth banks. The center column are the banks that we are currently in process of beginning to support, and by the end of the year, we expect to have all top 50 U.S. cash management banks on our supported list. So chances are highly probable that you're going to find your banks on these current or in-process lists. So, Tony, in conclusion.
Well, in conclusion, to get your arms around these pesky account analyses and turn that stack of incomprehensible information into some really powerful business intelligence for you, but to manage your treasury operation and to manage your bank relationships, click on indepth.treasurystrategies.com and take advantage of our 1-year free offer. Thank you for joining us this afternoon.
Thank you, everyone. Bye-bye.